Well, my guests have been introduced, and let me maybe get some opening comments and reactions from them in terms of how they have seen the budget. Frank, let's start off with you. Is it this a thumbs down or a thumbs up for you in terms of the budget for 2016?
Thumbs up for me. A few elements that I had in mind were touched on, but my overall sense is you can't shrink yourself to greatness. Where is the growth story? We look at the NDP, we talk 5% growth. I mean, we're nowhere near there. So for me, it's a thumbs down without a doubt.
So you're not seeing where the growth is coming from, and you're basically saying this is business and as usual in a business unusual environment, so you're not impressed by the outcome?
Yeah, well, the story of cutting, the story of a little bit of touch on the SOEs, the tightening of the belt, I think that's all good, but I don't think it's just going far enough.
Somebody described the story of cutting as cutting biscuits and consultants. They generally go together. Stephen, let's bring you in. What are you seeing? Are you seeing a thumbs up or a thumbs down scenario?
I must agree with Frank. So it was a very well thought out. It was a good speech from a tone perspective, but at the same time, I can't help but feel that I missed some of it. So I felt there was a little bit of detail lacking. And I can't help but feel that there's a crisis that's been wasted today.
A crisis that's been wasted, and they say that good politicians never let a crisis go to waste.
Agreed.
Again, I think you raise an important issue because there's a lot of political analyses that needs to go around this particular budget, and we'll get to that in a moment. Adrian, your immediate reaction, up or down?
There were two things that stand out to me. The one is a deliberate, concerted effort to provide reassurance, policy consistency. There was a deliberate reference to the NDP as being front and center in terms of policy. I think that's really important. And the second was the call to collaboration and partnership, that we can't do this alone. Having said that, this is words. This is a plan. This is not the action.
I actually want to stay on that point of the NDP, because the NDP was missing from the stage of the nation, and it was almost as if there was a reflection at a political leadership level to say, we actually missed something here, so let's use the first part of the speech to reposition and recenter the NDP.
What the revolving door fiasco did in December was it put incredible uncertainty around, so who's in charge, what's the policy, where do we stand philosophically, and so on. And putting the NDP front and center today, I think just underscores that this is the policy plan, and business can plan around that. They can put their investment decisions into that context.
And maybe a bit of an unfair question, Frank, because one would also think that the international community, the investment community following the budget are looking at more than just the budget. They're also looking at the credibility of the man himself in Minister Pravin Gordhan. Do you think that he relayed the kind of confidence that investors are looking for?
I think from how he delivered the speech, definitely. And as Adrian says, that call to collaboration, that constant reference to, we know things are tight, but we're a resilient nation. We can get above it. I think, but that's all rhetoric for me. Ultimately, what an international investor is going to look at is implementing. What are you actually practically going to do to get your country to grow so that you reduce unemployment? Sadly, for me, that was missing.
I guess one of the big things going into this budget, Stephen, was, well, we need to protect this downgrade in terms of our investment grade, or potential downgrade into our investment grade for South Africa. Was this a good enough of an innings for South Africa to have that protection?
Yeah, so look, I think the elephant in the room was rating agencies. So few would question the fact that it was rating agencies front and center today. And by that measure, rating agencies, rightly or wrongly, look beyond the rhetoric and they look to the hard numbers. And I just think the hard numbers were missing. There was a couple of things that were talked up and that the rating agencies and general public were looking for, and they were just absent today.
The numbers were missing. Let's see if Peter Tadman-Talto, who joins me now from London, agrees with that analysis. Peter, thank you for making the time to join us. We've just been saying here in Johannesburg that the ratings agencies and the investment community, no doubt having their eyes on the budget. Was this enough to make sure that South Africa stays away from a potential ratings downgrade?
Well, that's the key question. I think it's really interesting to actually think, what did National Treasury actually think was needed to avoid sub-investment grade? Because I think they didn't deliver it today. I mean, fiscal was very, very conservative, but then the rating agencies have been very clear that short-run fiscal is not what matters. What really matters is the microeconomic structure reforms that are going to boost medium-term growth. And we saw nothing on that today particularly. We saw appeals to NDP, which were the same as before. We saw lists of sort of infrastructure spending and things like that, which are not really helping the agencies onto a more positive footing. And so overall, it's pretty disappointing, I think. And it was very interesting to see the market reaction, particularly in bonds, considering the lack of growth measures coming through. That was really the driver at the end of the day.
Well, Peter, Stephen Schultz is here with me in Johannesburg. He's got a question for you. Stephen, please go ahead.
Peter, I was just wondering how closely the international community are watching the growth numbers that were put forward today. And I suppose an extension of that is whether you believe that those growth numbers, the projections, are credible.
Well, the growth numbers are the first hurdle for credibility of the budget, and broadly they were okay-ish. I mean, we had 0.9% growth penciled in for 2016. That's my growth forecast. It seems like they may be overestimating a tiny bit in the outer fiscal year. I mean, very sort of geekily, I mean, I think they're overestimating what they think the deflator for GDP is going to be in sort of 2018, 2019. That gives them a little bit of fiscal room. But very roughly, the growth numbers were really okay. And I think that's not really what we mean by looking at growth. We mean, where is potential growth in the long run? Is there still this speed limit of the economy around 3%? And that seemed to be the case from National Treasury's projections as well today. But also on the policy side, nothing really to boost our own projections in the medium run for potential growth either.
Peter, but this budget is also happening in an election year with the municipal elections looming large. Could we have expected anything different? Could Minister Pravin Gordhan actually really tabled anything bold given the political context?
Well, I think he could have. I think he could have had a few little tidbits of restructuring of state-owned enterprises, of some genuine privatization actually coming through, some real changes to labor laws, say, coming through. Instead, he was trumpeting the opposite, minimum wage, which Fitch in particular has highlighted as a very dangerous thing for the growth outlook in the country. And yeah, there wasn't that sense of a real shift in thinking about boosting growth going forwards. There were, a lot of squirreled away expenditure cuts pushed down to the local government and into the provincial level, which weren't really detailed, but were within the thicket of the budget review, which are going to be difficult to deliver on, particularly these hiring freezes at the lower levels of government that we're going to have to watch very closely in this election year.
Peter, a quick comment on the approach to taxes. You issued a note on Monday saying that you were expecting higher taxes and quite a sharp pull down in terms of expenditure. How does today's developments tally against the note you put out on Monday?
Yeah, on the expenditure side, it was roughly as expected. There were no sort of massive headline, sort of cuts of we're not going to do this sort of expenditure or, anything like that, or cutting benefits. We didn't say anything like that. What we saw was this scattergun approach of expenditure cuts really pushed down into the line departments, provinces and municipalities. On the revenue side, there were a few surprises. We didn't see VAT hike, and we thought they would politically be able to get away with that, actually, now that NHI is moving forwards, but clearly that wasn't the case. But things like the capital gains tax increase was expected, the fuel duty levies, things like that were also expected. But there was a little bit of reliance on, if you like, cheeky one-offs. We saw a 7 billion saving result of FX valuation changes of deposits at the SARB, which were used to sort of lower the issuance profile going forward. So it was roughly as expected, I think, in terms of the detail overall. And no wealth tax as well. I remember there was some speculation of that. We weren't expecting a wealth tax, and that wasn't delivered.
Peter Tadman-Talto joining us from Nomura International in London. Thank you for those insights. We bring the conversation back to Johannesburg. Adrian, I want to pick up on some of the points that Peter raised there. The state-owned enterprises, the potential review of SAA and SA Express. Really, I don't see how this is going to fundamentally change the challenges that SA is faced with. In fact, I would go as far as saying maybe SA Express and Mango, if there was a case there. I don't see how this is addressing SAA and the problem that we have there.
Look, there was veiled privatization in this. You can dress it up and call it whatever you like. There was reference to sort of buried companies that spill over from 25 years ago, and that very much is the case. There's two issues with a state's balance sheet. The one is it's poorly structured, it's very inefficiently structured, and the second is there are large important parts of it that are poorly run. So when Minister Gordon started this by making reference to a call for radical, bold structural change, we land up with fizzy drinks.
Yes.
So this is a big no vote. There's a no budget for fizzy drink for fizzy drink drinkers. But what we really need to see was where was this bold action?
Yeah.
And that's the place to start. If you've got this extraordinary balance sheet, and it is an asset-rich balance sheet, there are two easy levers to pull. The one is the financial engineering lever, which involves restructuring of the ownership, and the other is the operational lever.
Yeah.
Neither was pulled properly. Instead, it's fizzy drinkers that'll pay.
Fizzy drinkers that will pay, but what about wealthy fizzy drinkers, Stephen? Because of
They're going to have to drink a lot of
he spoke about a budget that speaks to inclusivity and slowly began to introduce the idea that the wealthier will have to take on a greater tax burden.
Yes.
Did that actually happen?
Yeah, so I think it was always going to be politically difficult to get a VAT increase through, but one would argue now is probably the best time to do it. He's got the opportunity, and that's what I meant by a crisis wasted.
But not in a municipal election year.
Not in a municipal election year. And to be perfectly honest, this morning, had you asked me, I would have also suggested a 1% increase across all income bands, which was probably going to raise a useful 10 billion per year.
Well, let's take a short break and maybe take a sip or two of those fizzy drinks. When we come back, we get into more analysis of the market reaction to the budget for 2016.